Brian Grimes, your real estate mentor, back with another action-packed session. We're going to be breaking down my 7 market predictions that are going to show you what the market's, doing and how you can get ahead of the competition. This is all about thinking ahead of the comp. Having more knowledge than your competitors is what's going to allow you to go a bit further. You only have to be, shockingly, like 1% better than the competition. If you're 1% better than the comp, you're going to get better deals. You're going to go a lot further in this game. And you're going to hit your goal, which is to break free from the 9 to 5. If you're new to the channel, like, comment, subscribe. Leave a comment that says, I subscribed. For everyone who leaves that comment, I'm going to send you instant access to my free real estate training. It'll show you how to acquire properties for pennies on a dollar all across the country. You don't want to miss out on that free offer. And just stay tapped in, guys. Stay tapped in throughout this session. We're going to cover a lot, even as we get further and deeper into the session. We will be doing live Q&A. So drop your questions, comments in the chat section, in the comment section. Even if you're watching this afterwards, we will dive back in and answer those questions for you. So as always, we want to start this off with a little bit of mindset. So let's get into some of the mindset, guys. This is I always take these mindset things, if you guys haven't noticed, from some of the calls I'm receiving. I'm talking to 50, 100 people a month a week who are interested in the VIP mentorship program. And I hear a lot of your fears. I hear a lot of the doubts. I hear, what's holding you guys back from being more successful. And some of you are able to get over those hurdles and get to where you want to go. And some of you aren't. Some of you are kind of stuck in either paralysis through analysis or just like maybe some type of negative mindset that is just holding you back, that you don't have anybody around you or in your circle to knock you out of. And even if you tap in here or we're on a quick phone call together, that might not be enough time. We may need more time to get you where you want to go. So the mindset hack is when it comes to real estate investing, it's not just what you don't know that hurts you. It's who you don't know that's actually holding you back. And this hack is part of understanding the game fully. So let's take somebody, even like myself, somebody with a ton of experience, somebody who's, maybe I'm not the best example because I'm getting to work with you guys, all across the country and tap into these different real estate markets. So I have a lot of connections. I have tentacles essentially everywhere. But let's take like an investor who knows their market. Like, your backyard market like the back of your hand. Like, all the streets, all the roads, all the investment opportunities out there. But if I take you, even with all that knowledge, all that know-how, and I drop you into a market where you have no connections, you don't know any architects, realtors, permit expediters, lenders, contractors, insurance people, all the different people and personnel that you need to be successful, you're still going to fail, right? You're still going to struggle. You're not going to be able to get ahead because you don't know the people. It's the who you don't know that's holding you back. For a lot of us, we don't have enough know-how. And I know that is something that you can solve. And some people are like, they think they can outsmart the game. So they're like, well, I can just go, watch YouTube. I can just go do this. I can go on Google University and I'll figure out the game. I'll get the know-how. But you still aren't in the room with the right players. You still don't know the people. And the people, the who you don't know, that's going to hold you back as well. That could hold you back to some degree within the real estate game, even more than the what you don't know. Because you can know how to build a house, but if you don't know a good contractor that won't burn you, then the who you don't know is going to hold you back. It's going to burn you. So you want to challenge yourself. The solution is to put yourself in the right rooms. Keep challenging yourself to get into the room. I was having a conversation with somebody today, and they said, Brian, I've invested in some properties before. I've done X, Y, Z. I was investing back in 2008, and I have a lot of know-how, but there's nobody in my circle. Like, I'm just not in the room. I don't have anybody I can reach out to tap into to get to the next level when I have these questions. So it's really like who this person doesn't know is what's holding them back. And I'm hearing it, and I'm like, bro, you got to tap in. You got to tap into the network. You have to tap into our community. You have to tap into the mentorship program, all the knowledge, but then all the resources, national lenders I can connect you with, all the personnel I can connect you with. And then just being in that room where you can reach out and text me any question you have about real estate if you're in like the VIP mentorship program. anything you have about real estate. Like you can just reach out and text somebody who's done hundreds of deals. Now the who you know within this game is growing. And when that starts growing, your knowledge starts growing, everything's going to come together. This game is not really about money. Look, we didn't say mindset is how much money you have is going to determine your success. It's not. It's not at all. It's really how much knowledge you have, and then how much you have in the terms of resources. Who are your connections? So building out those connections is crucial. It's key. And keep that as part of your mindset hack, because some of us get stuck even in the knowledge piece where we say, I gotta know. Even if you didn't know anything about real estate, if you were connected to the right people, you can still get deals done and execute and make money, even if you're starting off with very little. So stay tapped in on the who you know. Guys, if you're getting value, like, comment, subscribe, leave a comment that says I subscribed. And more important than that, share the content with somebody else who you think will get value. That is the most important thing you can do almost in life, especially within our community. And you guys know how we're building this and who we're building this for. Within the community that we're building here, one of the most important things you can do is share the content with somebody who needs to be in this circle, who needs to have this as part of their weekly consumption. Because, you know, they say you are what you eat, you are what you consume. And if you consume this knowledge, if you just stay tapped into these types of calls, you are going to become a developer. You are going to become a real estate developer. You are going to become a professional real estate investor if all you did was just stay tapped in. You are what you consume. So make sure you're putting this on, not necessarily the drama TV, the gossip, even some of the hip hop stuff. It's like that's part of the negative algorithm. You are your own algorithm. So what are you choosing to feed your mind on a weekly basis, on a daily basis? If this is part of your weekly consumption, you're going to do very well. You're going to excel. Guys, drop your questions in the chat section as we go through this. I'm going to dive into some of this content now. So let me get back here. Here are the 7 housing market predictions that you guys must know. Number 1, it will become harder to qualify for a mortgage in 2024. And I'm telling you this for 2 reasons. One, it's just a fact, right? There's something called the Mortgage Availability Index, Credit Index. Mortgage Availability Credit Index. And what this tracks is how available mortgages are to consumers. So when that credit index is high, this mortgage availability index is really high, that means that it's easy to get a mortgage. That means part of being easy to get a mortgage means if you go to the bank and you don't have a lot of money, or you don't have a ton of cash or liquidity. Dr. Glock, we will speak about rates. But if you go to, if you go there and you don't have like a lot of liquidity, you can still qualify because it's easy. Cash is available. This happens during times where the Fed is like printing money. A lot of capital is available. The banks are essentially just lending it out. They'll start doing things like lending out money at higher rates, at higher loan to values. This means if you go to the bank right now to do a refinance or a cash out refinance, they might cap you at like 70%, 75%. Now, we're not going to give you more than that. Well, in 2018, when the index was a bit looser, when there was a lot more capital circulating around, those rates, you could do a cash out refinance at 80%. I knew some people that were talking about 85, 90%. They never quite got there because, all the shutdowns hit. But you have to track this index. As soon as the shutdowns hit, the index collapsed. It went back down to, I would say, like 2010 levels, which are pretty much historical lows. And we're getting back to those lows. The mortgage availability index has been going down. So sitting on the sidelines is not your friend like right now, because as some of you are waiting, and we're going to keep getting into some of these predictions and how they will show you that waiting is like not the move, because as you're waiting, thinking prices are going to go down, they may not. Mortgages are going to become harder to get. And what that means is for the people with the pre-existing relationships. So this is part of that who you know again. If you are in the game right now, you are going to have relationships with national lenders, people who are like, yeah, we know Brian, or Ace Deuce congratulated me on the 10K subs. We have crossed over 10,000 subs, and that was a heavy push. But they might say, we know Ace Deuce. He's a good guy. He's done some deals back in 2023. Let it roll. Even though our lending requirements have tightened, let him rock. Let him keep doing deals. But you come in new in 2024, having never done a deal, and they don't want to deal with you because you're somebody who's new. You haven't done any deals before. And now the lending requirements are like, no, we're going to hit you with all the strictest requirements. So as it becomes harder to do qualify for these mortgages because the mortgage availability is just not there within the marketplace, the money is drying up, you are going to hurt yourself by sitting on the sideline. You need to get in the game now. Part of being in the game is just having these relationships open to you, having experience, proving yourself with national lenders so that when the opportunities come, because there will be some opportunities coming into next year and beyond, like there's going to be a ton of opportunities. There's a lot of shakeups. You want to already have established relationships. So sitting on the sidelines, while it might feel safe, is very dangerous because it will not allow you to establish the relationships that you need in the future. And people are watching. There is a track record. So you have to get some deals done. You just have to go out and get some deals done. So that's number one. It's going to get harder. You guys need to be aware of that and understand why. Yeah, if you wait, you will miss out on all of the distressed properties. You will miss out on that. And there's a lot of distress in the market as well. That's another reason not to wait. There's like 100, I might write a book like 101 reasons not to wait to get in real estate, because there's really 101. But this is another one. As we're getting into tougher times, where we're going into recessions, rates are increasing, people can't refi. People who were in annual renewable mortgages back in 2015, they're now getting beat over the head right now. So they're in distress, and you can come in and negotiate. Like I was telling a guy earlier today, I was on the phone with one of our masterclass members, one of our VIP students. The guy's 20 years old. So a lot of you there are people I talk to who say I'm too young to do real estate and then I'm too old to do real estate. You're neither. Now's the time. Now, like today is the time, no matter where you're at. But he's 20 years old, came in, learned the game fresh. We were on the phone with a motivated seller a week ago, pitching a lease purchase option on a $300,000 property that he's going to take over with no down payment, no banks, no nothing, and then reposition that to a rent-to-owner and sit in the deal as a middleman, collect cash flow, set up a future check. And that's a no cash, no credit strategy, guys. That's a sandwich lease option, something that we teach in the masterclass. But because he's newer to the game, he's just like, I trust what Brian's saying. He's just executing. He's just going in, taking the action steps, getting in front of motivated sellers, pitching. I got on the phone with him. We pitched the motivated seller. He was kind of laughing because of the pitch, because I was so laid back on the phone. But just, showing the ropes. But anybody can get out there and do it. You guys will sit on the sidelines being overly analytical, and some kid will come in and eat your lunch because he's hungrier than you and just will trust the process and go after it. So you have to bet on yourself. When in doubt, bet on yourself. Bet on your education. Bet on entrepreneurship. Because betting on a 9-to-5 is just going to leave you screwed. It leaves 90%. There are some people who are skilled enough, who went to the right schools, who have the right connections, who can go and play the 9-to-5 game, and who have that talent, who can survive that gauntlet. But there's very few. There's I would say more people make the MBA than make it to the top of, corporate. It's like crazy. So you have to bet on yourself in this game. You have to bet on yourself. Irosa says, I'm new to this. How much do we need to get started to get qualified for these mortgages? It depends on what type of deal you're doing. So if you're doing like a really aggressive deal, like a $500,000 multifamily project, and depending on your strategy, that's what's going to determine how much capital you have to put into that deal. So if you're dealing with a strategy like I do, where I'm going out and finding distressed properties that I can buy for pennies on a dollar, and then I'm getting a construction lender that'll put up 90 to 100% of the capital to acquire that property and give me the money to renovate it. And I'm executing with my teams and my people, and then refinancing out of that deal at the end, or flipping it, just putting it on the market and selling it to access, the forced equity, the forced appreciation. You don't need that much capital to do that. Now, if you don't know a lot about the game and you just go in and you're like, yo, I'm gonna get this $500,000 multi, and they're like, yeah, we need 25% down. So you go park that money down. That's not necessarily the way. But that's where most of us start, because we don't have the knowledge. We don't have the know-how. We don't have the resources. We don't have the connections. So if you're not in like the VIP mentorship program and you don't know what you're doing, you might go out and just park 50 grand into a deal. Then you tap into a mentorship program. And I'm like, yo, you didn't have to do that. With that 50 grand, you could have leveraged it like this, and you could have got 5 properties, 6 properties. And you're like, oh, so what you didn't know hurt you. So if you're just getting started, it's not really a question of how much you need. Like this question is almost, it's like, how much do I need to get qualified for these mortgages? But it's also a question of how much money do I need to invest in real estate? The first thing to invest in is not real estate, it's you. I say this all the time. The first thing to invest in is you. Invest in your education, invest in your knowledge, invest in your resources. Then it will be very clear on exactly how much you need to invest in real estate, because that's a question of strategy. And in terms of these qualifications, there's so many different mortgages out there and strategies. So I can't answer the question blank like that, because if you're doing a house hack with a FHA or one of these 1% mortgages out there, you might only need to come up with 1%. Now, if we take it a step further and we get down payment assistance and conjoin that with a FHA, now you might not have to come out of pocket at all. Or we can do creative financing, where we're taking over the existing debt that's already on these properties, and you don't have to deal with the bank at all. There is no, mortgage. You take over the existing mortgage, make the payments, control the property, get it deeded over to you. So it really depends on the strategy and the approach. So the first thing to do is get educated, because the education, like, think about what I'm just telling you. I'm telling you there's multiple strategies, but there's 2 strategies that we've identified. One that would require you to put down $50,000, and one that would require you to put down 0. So then what's the value of having that information? It's $50,000 worth of gain easily that you can quantify on one deal. Now, what's the value of that multiplied over 10, 20 deals? There's like an infinite return on your knowledge, which is why the first thing to invest in is you and your knowledge. So hopefully that helps. Absolute truth. Jump in while it's open. Yeah, a lot of these opportunities, it's just like anything else. There's a window of opportunity, and there are going to be people that are in the game that are actively taking advantage, and then there are going to be people who are afraid. Usually the people who sit on the sidelines, by the time they jump in, that's when the market is really going bad. This when all the sideline people jump in, because they're jumping in because now they're reading the news, and the news is saying, oh, it's great, it's great, it's great. By the time that happens, that's when they're about to trick the masses. When they're saying it's really bad, it's doom and gloom, that's when all the big money is coming in and grabbing all the value. So you actually want to be counterintuitive. You want to be a counter investor. And that's part of what we talk about. We're free thinking investors. In the masterclass, I teach you guys 6 core strategies for how to invest in real estate, so that you can pivot with the market. As the market changes, you can ebb and flow. You can buy and flip. You can buy and hold. You can do creative financing. You can invest in tax liens, tax certs. You can do all of these different strategies. That's part of being a free thinker. And therefore, you don't need the news. We watch the news to understand the macro trends, but then we don't always take those just as they're written. We challenge them sometimes, because we have to use logic and free thought to arrive at the conclusion that's going to allow us to make money. But it's definitely not with the news. The news doesn't care about you making money. It just cares about clicks. So they're going to sell you fear and doubt, because fear and doubt is going to get your attention. Fear, doubt, and drama is going to get your attention. Truth doesn't get that much attention in this world we live in right now. Pete says mentorship is the way. First deal today. First deal today. Mentorship's the way. I mean, me and Pete were just talking today. We were talking about a deal, 2 days ago, Pete? Maybe on a Sunday. He got it under contract. Boom. Today. Nice deal. I believe that was in South Philly, down by the stadiums. So, And Pete's, tapping in. He tapped into the mentorship program not too long ago. I feel like it's only been 60 days or something, Pete. You can correct me if I'm wrong. I feel like it's been 60. It's been some point within 60 to 90 days. So he said, yep, you rock. It's been like 60 days. So another example of somebody who tapped into the mentorship program. My promise to you guys know, is that I'm going to do everything within my power to get you into a deal within the first 90 days. And I'm going to keep rocking with you until I get you into that deal. Even if it takes longer, but for most people, it doesn't take that long. Once you get the hang of it, we gave you some spreadsheets. Pete, we gave you some spreadsheets, some game, showed you how to analyze the deals, tapped you into resources. Boom. The deal pops up. I mean, it works like clockwork because it's just a logic-based process. I mean, there's nothing, I won't say there's anything magical to what I do. And I've told you guys before, I didn't invent real estate. In fact, there's almost nothing new under the sun. When you really do your research, there's nothing new under the sun. All of this is a rerun. I didn't invent this stuff, but I have refined some of these processes, and I have systems that allow the average bear to scale, to get results. So my superpower is not in inventing these strategies, it's in simplifying them and then building systems that any of us can tap into. So I only need to show you, once again, in case you missed it the first time I said it, I only need to show you how to be 1% faster than the competition. It's just like a race. How much faster was Usain Bolt than the other competition? I mean, he's probably much faster. But in some of his slower races, we'll call it, he was not that much. He's like a 10th or 100th of a second faster than the next fastest guy. And he wins the race. He's first place. He's on the posters. He's on your Wheaties, right? He's on a Wheaties box, literally. So you only have to be 1% better than the competition in this game to eat their lunch, to get the best deals. Pete said less than 60 days. So I don't give myself enough credit sometimes. He might have been 45 days. So if some of you are on the sidelines and thinking, can I do this? Can this happen for me? Pete started fresh. Pete started super fresh. And we just got him tapped into the game. So if it works for him, it works for so many others. It can definitely work for you. You just have to bet on yourself. Don't doubt that this process works, because it works for so many people. It works for me. If it didn't work for me, I wouldn't do it, and I wouldn't teach it. But you can do it. Bet on yourself. You have to believe that you can do it. Don't think that you're so different that what works for everyone else won't work for you, because you're so different and you're so stuck in whatever story you have that's holding you back. Forget about your story. Quite frankly, your story doesn't matter at that level. You can have whatever story you want. If you come to me and learn these systems and I teach them to you and tap you in, you will get a deal. I don't care what your story is, because I've heard them all. And they're not bad stories, some of them. But they still aren't going to stop you from getting a deal. I don't have enough cash, still get a deal. My credit is jacked, still get a deal. It's like, we got a solution for that. If I didn't, I wouldn't be here. And I wouldn't be the guy, right? I wouldn't be the go-to. Do you think that it'll be harder for investors to refinance out of investment properties for buy and hold? It's going to get tighter. Like, I was talking to somebody today, and I said, what's your credit score? He said, I haven't checked my credit score since like 95. I said, bro, we got to get you tapped in, because you have to stay on top of yourself. You have to stay on top of this game, because as things get harder, like, you don't want some credit card bill or something that was unforeseen and it just slipped through the cracks. You didn't have your credit alerts on, and then it jacked your credit. It's going to make it harder. Like, the banks are going to have to tighten the requirements moving forward. So as this happens, it's going to get harder. It's not going to be impossible to do a refinance for the average investor, especially if you have a track record already and have pre-existing relationships. But if you're sitting on the sidelines thinking, I'm going to pop in 2024 and, then it's go time. Right now is a bad time. Like, you're wrong. You're just wrong, and you're going to lose, or you're going to have a harder time than somebody who gets started now, and they come in with the same credit score as you. Like, that's basically what I'm trying to tell you guys. Like, you could walk in the bank with the same credit score as the next guy, but if you have the pre-existing relationship and they don't, they might get declined, and they're going to fund your deal, because they're the ultimate decision maker. They're going to do what they want to do. you know? So as it gets tougher, they're going to make those types of decisions on underwriting. Dr. Glock said it's a lady here in Chicago who just started flipping properties at 75 and has 8 deals under her belt already. Yeah, I mean, you're never too young or too old to do real estate. Because how old is real estate? Real estate's so old, you could never be too old to do it. It's older than you. It's been around since the beginning of time. Thanks for the knowledge. I'm grateful for this knowledge. Definitely happy to help. Happy to help you guys. Skill driven, not fear driven. Absolutely. Replace all of your fears and doubts with just knowledge. Just replace it with knowledge, because that's what you're afraid of. You're afraid of what you don't know. Everybody is. That's like since the beginning of time, like man's problem, right? If you fear what you don't know, you're afraid of the others. If you're afraid of real estate, it's just because you don't have enough knowledge. So we have to replace that fear and doubt with the knowledge. Jonathan, who's also just getting it done, working on a massive project. Do you believe that mortgages will be difficult to originate even for hard money lenders, or is this just across broad, harder to originate for all lending institutions? I mean, hard money lenders, if you notice, like, well, maybe you guys don't know because you don't follow them or use them that much, but they kind of don't change. Hard money lending, if I took your average national hard money lender and I removed the veil and I showed you like the decision makers, it's usually like 3 people in the boardroom. Most people are shocked by that. They're like, the national lender, there's got to be 100 people in this company and a process, and they have this underwriting guide, and I don't fit in it. And I'm like, it's just 3 people. That underwriting guide is nonsense. It's there to weed out the haves from the have-nots at a bulk level. But when you get down to it, they're going to underwrite the individual. So if I walk in there and I say, look, I've done hundreds of deals, I've done this, I got these deals, I got these resources and teams, call so-and-so, you can check and validate my track record. They don't care about the underwriting box. Like, they're going to start rolling out new solutions. And if they don't know what the solutions are, I'm going to, hey, so here's a solution. You guys may not have thought of this, but if we do this and use this appraiser and do these types of deals and restructure them this way, then you guys can package your debt and you can sell it here, and it's going to diversify their book. And they're like, oh, this guy's giving us new business models. They start rolling out new products, because it's still just 3 people in a boardroom that have to be convinced. It's not a bazillion people. So the hard money lenders also, their pricing, because they're doing aggressive lending, like they're lending on properties that need a heavy renovation. So they're taking on, in the space of real estate, all the risk. They're charging at 13%. They don't care if interest rates could go down to 2% on a 30-year fixed, or 1% on a 30-year fixed. And they're still going to charge you 13% for a construction loan, because they're like, yo, we're taking a risk. We're helping you to rehab a shell. So they're kind of independent of what's going on in the market. It's not necessarily them that's going to be harder. It's going to be when you go to get that 30. When you go to get that 30, and listen, it's not going to be impossible. We're already pretty low on the credit availability index. So it's not like it's going to be impossible, but waiting is not aiding you. It's not putting you in a better position. It would be putting you in a worse position to wait. Not going to cripple you. It's not like they're going to stop issuing mortgages in 2024. But if you're a newbie, you'd rather be a newbie right now than as things get tighter, because it's just going to get harder for you. And you don't need more obstacles to get started in this business. You need to start right now, even if you're barely getting deals done, because they already know you and underwrote you in 2023. They're going to do easier business with you later on. Ace Dude, should we as investors focus more on fix and flips going in? I would say so. Even I would say, like, if you haven't done fix and flips or considered them, because there are some hardcore, I'm one of them, like buy and hold people. You want to start to mix that into your portfolio. As rates go up, you need, and rates will come back down. Is one of the projections. But now that rates are a little bit higher than like 3-4%, you might want ways to create more liquidity so that you can take more liquidity, park it into deals, buy and hold deals, or just leverage it into more properties to get more cash flow. Because there's now, even if you're doing a full BRRRR strategy deal, there's less cash flow per property than there was at a 3 or 4% mortgage. So therefore, you would want more free cash flows to go out and acquire more properties. So there's just a lot. There's a lot of strategy to it. Let's get into more. These are all good questions. Let's get into more of these predictions. We have 7 of them. I'll try to get through as many of them as possible, depending on how many questions we have. Guys, if you're getting value, like, comment, subscribe. Leave a comment that says I subscribe so I can send you that free training. Share this content with somebody who will get value, and let's keep flowing. And we have crossed over 10,000 subs. Let's push it up to 20,000. See how long it takes us to hit 20K. So prediction number 2, rising homelessness will lead to zoning law changes for single family residents like ADUs, which are accessory dwelling units. So if you look across the country, I mean, you guys have to think about it. Things are getting more expensive. There's inflation. Rents keep inflating and going up. The cost of housing keeps going up. So the prices on housing have been appreciating. Even this year, prices are up in many markets like 7 to 10%, which is shocking. A lot of people were saying at the beginning of this year, what? Prices are going to fall. The market's going to collapse. I was saying, no, it's not. It's not going down. It's going to stay stable. If anything, it'll increase. The market's strong because there's a shortage of inventory. And sure enough, there's been all of those things. And the market has been very strong. But as prices get higher, the cost of housing is higher. The rents are higher. Homelessness is ticking up because there are people that are further at the bottom of the spectrum that now get pushed out. There's not a lot of affordable housing being built either. So people are getting pinched out of this situation. And as that's happening, you're starting to see like a wave of regulation. You have to pay attention to these things because they're very important. I was actually at a wedding and I'm talking to this guy, and it's like my wife and his wife are like attorneys. And I'm talking to the guy and we're kind of like the husbands. And I'm like, what do you do? He's like, oh, I build ADUs. And I'm like, oh, you build accessory dwelling units? I was just looking into those. And he's like, this guy knows what accessories are, because like nobody knows about this stuff. It's so new. But this guy's going around the West Coast, places like California, San Francisco, some of these extremely expensive markets where ADUs are coming out because they have the homelessness problem the worst there. And he can target, like, they will target any property that has a certain amount of square footage, and you can build a secondary property in the backyard. This company comes in, they build the properties in like Mexico offsite, then they load them up. They're modular. They ship them across the country, right, and drop them straight in the backyard in like 3 days. Like they just build a land slab. They just build a slab in your backyard and just plop it right there, unfold it, button it up. And in 3-4 days, you have this secondary house in your backyard that you can actually rent out to a tenant. So they charge for the full service. But what this does is it unlocks cash flow for somebody who's sitting on a single family. So the goal of it is like to allow people to have more affordable solutions and get more value out of their single family homes. So now, instead of having to sell your house and downsize, you could just build the ADU, which you could actually build these up to 2 stories if you want in your backyard. And you can live there now, tap into your same electric, tap into the water, tap into the utilities. And now you can rent out your primary residence, live in the house in the back. So there's a lot of this going on, and this regulations is like, it's hitting all across the country. It's in New York already. It's in Philly and the suburbs of Pennsylvania. It's in California. It's in like almost every state, and it's starting to hit with that wave, because if you can get more affordable housing, even out of your single family residences, now there's going to be lower homelessness. But how much of an impact is it going to have? I don't know. But as an investment opportunity, how many people could unlock value? Because this company's doing this in California, but there's a lot of places, like if you had this type of property in rural Pennsylvania or Philly or Delaware or Jersey or New York or wherever, and you did this, you could unlock serious value. Like the average homeowner, I would say there are going to be opportunities to build these things for as little as $50,000, and you can probably get it 100% finance with the right planning, with the right education to a lender, you get 100% of it financed. You might take out a HELOC and build it. And now you just created a whole nother stream of income off of your primary residence. Especially if you have a bunch of land, which there's a lot of states across the country where people are getting homes with these huge lots that they're not really fully using. Now you can build that second house on the lot easily, like by right. So you have to be kind of aware of this knowledge and the things that are going on out here, because this is what's going to allow you guys to win. Even if you're starting off and you just have a single family that you're living in and you're like, hey, I want to create more cash flow so I can retire, break free from the 9 to 5. You might be sitting on a single family residence where you can unlock another $2,000-$3,000 out of your backyard, get it 100% financed, and you just don't know it. So another example of what you don't know can hurt you. Are there gap lenders for hard money, for money that the hard money lender can't cover? Or can I borrow 10 to 20K from my own properties? I would say it depends. I mean, you could always, if you can't borrow money from your properties in the form of like a home equity line of credit or something like that, you could take a property that is paid off and leverage it with a hard money lender as like part of your down payment or contribution into the loans, part of your skin in the game. So you can take a deal, like deals always have value. Even if you just bought land, you could take land and say, look, this land fully developed is worth XYZ. So I can take that and I can, add that into this deal, and that's going to allow me to, qualify for this loan, where you can now do a hard money loan and go flip a house or something with that. So owning land, owning assets is definitely like the way to go. Dr. Glock said we need this anti-guru channel. Definitely the anti-guru. This is I'm just a mentor. There are a lot of gurus out there. There are very few mentors out there who really will just teach you the game. So if you're looking for the guy standing in front of the Lamborghini, tap out, like unsub. But if you're looking for real knowledge, definitely tap in and tell a friend. FHA laws protect affordable housing renters and landlords. No, that's definitely there. There's definitely a lot of protections for, affordable housing renters and tenants. What else we got? Can you comment on your acquisitions training? I mean, I dropped so much content on the acquisitions and how to get deals in 30 days and like my full sprint. And, if you're in the VIP mentorship program, that's all in the mentorship program as well. But I guess high level on acquisitions, it's about volume. A lot of us are trapped in a scarcity mindset. So we're programmed in life, from life. Isabel said she'll send me her Lamborghini. We're programmed in life to live in scarcity. Like, I need more money. I need. When you're thinking I need, you're in the scarcity mindset. So then you might come into real estate and bring that mindset with you. So then you'll think, I need a deal. There's no good deals out there. Or it's hard. You automatically are programmed to think it's hard to find good deals. The only way to get good deals is to have some secret shortcut that nobody knows. So you're kind of out looking for that. And I've never found a secret. Actually, that's not true. There are some shortcuts and there are some workarounds. But more than that, most of the secrets, shortcuts, and workarounds do not provide the amount of volume that you actually need to be in abundance. And I'm more of an abundance mindset investor. So what I like to do in terms of acquisitions is I like to tap into so many markets. I want to get to the auctions. I want to get to the off-market deals. I want the wholesalers. I want the direct-to-consumer. I want the MLS. I want everything. I want the Craigslist, the Facebook Marketplace. Like, I want to see deals everywhere and be plugged in everywhere. So then all these deals are kind of flooding my inbox every day. I just have this abundance, this overflow. And once you have overflow and you're in abundance mindset, you now get in the habit of cherry picking deals. So now you don't just want any deal. You want the best deals that are available out of the abundance. So it's just like if you're walking through like a strawberry field and there's just unlimited strawberries, you're going to try to pick the best ones. You're going to try to pick the best ones. Now, if you're walking through there and there's barely anything, you're just going to grab what you can get your hands on. So shifting that mindset and then creating the conditions of abundance. And then from there, the acquisition strategy is based on speed, because I just have to be 1% better, which the speed is 1% faster. So now if I'm in abundance, if I can get to the deal faster than the competition, just 1% faster, now I'm there. So I'm in abundance. I'm getting to the best deals faster than you, because you're stuck at the 9 to 5, and I have the, better resources or systems, or teams, or whoever, to get out in front of that deal. And I have a faster analysis process and how I run my numbers. And because I do this more than you, and I'm better than you, I'm not trying to say I'm better than everybody, but I'm just breaking it down. Because I run my numbers fast, like I run them so much that I know the comps mentally. And anybody can do this, by the way. If you just keep practicing and running comps and pulling numbers, this is how Pete got his deal, because he started practicing like I talked about. Now I can see a deal because I got so many reps in, and I can say, they're selling that for $75K. That's worth 210. There's like a voice almost in your head that will tell you this. That's worth 210. That's in what zip code? No, that's worth 210, definitely. 1,200 square feet? Yeah, definitely. Because you've seen it before. You've pulled the comps before. You've done the work. So it's not necessarily like just a process in terms of my acquisitions. It's almost like building an athlete. So it's like if you ask like LeBron James, like, so what's your process for like playing basketball? And it's like, well, there is a process to how he plays and some strategy, but there's also this preparation. And it's the question really is like, how many shots does he get up? How much does he work out? How does he rest and recover? How does he do all of these things? And how does he build instincts? So that's when he's in the game, instincts take over. When I'm in that real estate game, it's all instinct. There's very little thinking going on. It's a feel. That deal's worth this. I look at the pictures. It's going to cost this to build it based on my experience. It's going to cost this. It's going to cost about $80K. I can get it for 60. It costs about 80. That's 140. It's worth 210. There's a spread. And I can do that in a nanosecond. Then I can copy and paste the deal and send a guy out to it. Boom, go see it. Then I can send it to my analyst, put together the numbers. Numbers look good. Send that over to the realtor, get an offer out. And that's a nanosecond. That's all happening within about 10 hours of a deal being listed. A deal could get listed tomorrow at 10 a.m. I could be in it at 12 p.m. I could have an offer out by 2 p.m. And you're still at the 9 to 5. So if I'm running that speed, that fast on you, I'm like lapping you. I'm way beyond Usain Bolt. I'm lapping you. And I have the analytics to where it's not a heavy lift for me because I've done it so much. And anybody can do that. If you do the work that I put in front of you, if I say, look, watch this content, this course content, here's the spreadsheets, here's how you fill them out, here's how you execute. I'm going to tap you into the deal flow. I want you to get up every day. I want you to analyze 10 deals. If you can't do it every day, do it 3 days a week. Instead, while you're watching a basketball game, while you're watching the football game, while you're watching a baseball game, I want you on your laptop, analyze a deal during the commercial breaks. Just become in the rhythm of it. Because the more you do it, here's the real secret of real estate versus the stock market. You look at the stock market, there's a billion deals. There's a billion deals. I mean, there's a billion stocks, there's bonds, there's all this types of stuff, right? If you look at real estate, if I go into most major cities, maybe there's 2,000 properties available for sale at any given time. Then if I weed those down to multifamily, maybe there's 500 multis. Then if I weed out my price points, maybe there's 250 multis to 300 multis that are within my price range or lower. You can go and see and run numbers on each one of those properties within a week. Now, anytime a new multi hits the market, you can identify it and place it somewhere within those 300. It's going to either be overpriced, underpriced, or right in the middle of the pack. And once you have that knowledge to draw on, because there's a very finite number of available properties and comps, and the comps are only changing once every 12 months, realistically, at the fastest every quarter. So as you do this process, you're now going to see there's the value, there's the value, and you're going to know, oh, it's this many square feet, this many beds and baths, it's in this zip code, it's worth this. You don't even have to look anymore. So you got faster. You got faster than the competition. You now got faster than the version of you that had to look, that had to pull the comps physically because it didn't know. So you start looking back. This is how you get to a deal in 60 to 90 days or 30 days even. If you're aggressive, you can get there in 30. But this is how you get there because you start becoming better than your previous self. Everybody, most investors out there are you right now, wherever you're at. That's what most investors are. So as you start to get faster than that, you start to separate yourself from the pack. So now you can get to deals faster than them. And if you're just getting started, you really only need to do what, 2-3 deals a year. If you flip 2 or 3 deals a year, 50K profit targets, you're up 150,000. That's more than most of us make. That's more than most of us make at the 9 to 5, like ever. So, and 3 deals, I mean, you could do that passively, like just scanning the market, keeping an eye out, putting the feelers out, and you could flip those deals passively. You can manage one project. I'm managing somewhere between 17 to 20 renovations right now. Just me and my team. So you could do more. You could do more than just one, but one will be not that heavy of a lift. It will feel like a lot, but with the systems, me watching over your shoulder, it's not going to be that much. But this is part of the process. So it's like a really good question in terms of like the acquisitions training and like how I operate. But this is how you will get better. This is how you will get faster. Roland just got some deals done. He said, I'm noticing speed in my market. A house went up and had 7 offers in 3 days. It's a smaller city on the outskirts of a major area. So he's in a sister city or a cousin city. And they're like, he's starting to see the speed. So then once you can see the speed, 7 offers in 3 days, that means you can't be on these deals in day 4. You got to be on that deal day 1. And you got to have the right strategy even within your offers. Because it's like there's always these barriers. So first it's like getting to the table fast. Then it's okay, when I get to the table, how do I structure my offer to be more competitive than the market? That's another level. And that takes either connecting with somebody like me and just getting the knowledge because I've done this hundreds of times, or you failing but sticking with it. So failing but not becoming negative and giving up, but failing and continuing to iterate until you get to where you want to go. But there's a lot to this game. But there's a method to the madness. You just need the method. And once you learn the method, you will get there. Isabel said, I'm fighting against the no one will lend to me mindset. And all of this whole game is just about mindsets. It's all about mindset. I was talking to somebody today who's dealing with like a really tough kind of like family-based eviction scenario, like really tough. And I'm like talking to them and they're talking to me about like a lot of things. And I'm like, yo, I get all that, but we got to get them evicted. Like the only thing that matters is just getting them out. But I could tell the mindset, like she had almost been left alone and kind of abandoned, like without any support to handle this nightmare situation for so long that it had just become like a hellhole. Like it was just like she almost couldn't see. Like I was watching this thing on YouTube. It's called the flea experiment. You guys can look this up. So you take some fleas. Fleas can jump like, I don't even know, probably like 10 feet. Don't quote me on that, but I don't know. But you take a bunch of fleas, you put them in a jar, and then you put the lid on. If you leave those fleas there for like a day, come back, you could take the jar off, the lid off, and remove the jar, and they will only jump as high as the lid was. They won't jump anymore. Like they've been put into this kind of bubble. They can't see anymore. They won't jump, literally. They'll just keep jumping as if the jar is there. So mindset becomes so important. It's why we start every session with mindset. Because if your mindset is wrong, if you're a scarcity mindset, you get into real estate, you will not get results. You will also I've seen people that are like, Brian, I can't get funding. And then I talk to them and then they get the funding, or I plug them in and they get the funding and they're like, I don't get it. And I'm like, but you were asking the wrong questions. You just didn't understand because you were so stuck in that pattern. You almost, reality will project to you oftentimes wherever you're at. So if you're looking for negative things, it'll just project it to you. Even some things that are positive will just appear so negative to you that you'll just stick with it. So you'll just be like, oh, there's no solution. There's no way. When there's a clear way. I will just never be of that mindset. So when people start working with me, it's kind of like you're not going to move my mindset with yours. So you're not going to come in with a scarcity mindset and then talk to me. And then I'm going to be like, yeah, you're right. It's really scarce out here. Like, it's just not going to happen because I'm not of that belief system. And I also know there's no value to that belief system anyway. There's no point in me joining you there because that belief system just gets you less. My belief system gets you abundance, deals, financial freedom. So, let's go into the next one and we'll keep answering some of these questions for you guys. Number 3, rents will continue to increase due to historically low vacancy rates. As rates and prices rise, more people will choose to rent. So as rates and prices rise, more people will choose to rent. You need to understand that because that's what's happening. Interest rates are going up, or they've been up. They're higher than they were. They will tick back down into 2024, 2025. They'll tick back down into the low 6s and then the 5s. They may get into the high 4s. But even if they're in the low 5s, they're really good for cash flow. But as these rents continue to increase, why are they increasing? Because we actually have historically low vacancy rates. How do I quantify that? They're kind of the lowest they've been in 35 years, like 3 decades. Like, they're very low in terms of historically where vacancy rates can be on a property. For those who don't know, if you're really green, vacancy is when nobody is in your rental property and it's just sitting without occupants. So as these rents go up because vacancy is low, there's actually a shortage of housing. You're also seeing people who are just choosing to rent. See, there was like that American dream for, other generations, the boomers and kind of everything. There's like this American dream. And part of that was buying a house while you're young. You get the house, you get the yard, you get the suburbs. A lot of people have given up on that dream. A lot of people aren't buying houses. They're just like, I'm going to rent. I figure this thing out. People are renting well into their 30s and 40s. That was more unheard of in terms of like a mass population of renters in that age group. That was unheard of generations ago. Now it's normal. So more people are choosing to rent because prices are higher. It's harder for them to afford the house. Prices are going to keep going up, by the way. Dr. Glock said it. The hedge funds want you to rent. They want to turn this into a renter's nation. America, a renter's nation. Just like places like Japan became a renter's nation. There are a lot of places across the world that are renter nations. Places like London, renter's nation. So when you're dealing with that, you want to kind of be in on the landlord side of things. You want to get yourself into these deals because rents are going to keep going up. There are going to be people who are going to tell you rents are going to downtick. They will in some markets, but on average in most of these metros that we talk about investing in and on these value add deals where we're buying them for pennies on a dollar, adding value and then refinancing out of them, those rents are going to continue to go up. And what happens in terms of an opportunity cost? So even the deal that you buy today at a higher rate, refinance your money out, and you're like, man, this thing only makes $200 a month. This sucks. Those rents are going to go up. So if you look, like if I put a spreadsheet in front of you and projected out a 2% rent increase year over year for 10 years, your cash flow on that same property would be like $650 a month. You got another 5 years, it's like $800 a month. By the time you get 15, 20 years in, it's like $1,000 a month. And if you bought 10 of those, and then they're paying down the mortgage and doing all these things as the tenants are living there, and then your property is appreciating in value, and you're getting tax write-offs and law. This is how you get wealthy. For the average person, even if you went out and just bought 10 properties and stopped, you'd be wealthy. You retire wealthy with just those 10 properties. You retire a multimillionaire. So understand that this is part of the trend, that rents are going to continue to increase because there's low vacancy. Vacancy will probably stay low because there's a housing shortage. And then there are more renters being created, we'll call it, because as prices go up, more people choose to rent. So that means as vacancy is low, the supply of housing, available rentals is low. Therefore, the vacancy is low. And it's going to get even lower relative to the demand, because the demand for rentals is increasing by the day. And prices are going to keep going up. So just make sure you guys stay tapped into that. Let me see what this question is. Can we talk about connecting the dots? Is it wise to refi multiple times if some lenders have better rates while others may have a better LTV ratios? Every time you refinance, you're going to incur some type of closing costs. So that's really what you're battling against when the refi is the closing cost. If you're refinancing into like a similar LLC or the same ownership, the same LLC, you're not going to incur transfer taxes again. So that's not really going to hurt you. But you don't want to refinance too many times because you're going to keep resetting the clock. Like, think about it on a 30-year note. That's amortized, right? Over 30 years, which means the early years you're paying mostly interest and less principal. So if you keep refinancing every 3 years, you're going to keep paying closing costs and then keep resetting the amortization table to the point where you're paying mostly interest and less principal. And that hurts you over time. Hypothetically, like if you're cash flowing, you might not care. You might be like, well, I can refinance into a lower rate and I'll get more cash flow and I'm going to hold this property until I drop dead anyway. Like, I don't care. You're not really looking at it like you're going to be paying back the mortgage or the amortization table, because the tenant is essentially paying the mortgage down with their rental income. But there's multiple ways to look at it. So it's a tough question, but it depends on what you can do with the money or the cash flow. If you can refinance and get more cash flow, it may make sense. There's going to be some type of break even with that equation if you take how much more cash flow you make versus the cost of the refinance. So if the refi cost you $2,000, but it got you an extra $100 a month, then there's a year and a half almost break even or something like that. A little bit over a year and a half break even, and then it's more profitable. So you just have to look at it kind of that way. It's definitely better to push through the real estate. Let's get into another one. This is a good one. There will be an increase in creative financing opportunities and mortgage takeovers. Mortgage takeovers being some of those subject to deals that are out there, where people have these lower rates. We're actually already seeing an uptick in this, where people have, the way to get ahead of rates right now is to just find motivated sellers who have existing mortgages that are already at lower interest rates, that are at 3 or 4% rates, but they fell into foreclosure because they lost their jobs or they're in pre-foreclosure. And you can go in and kind of structure creative financing deals. If you don't know how to do that, you should get into the mentorship program. We also teach that in the group course, so you can learn it. But you should learn about creative financing, like right now, how to take over these types of properties. There's an uptick in focus on that. So more of these transactions are happening now because of the rising rate environment over the last year. So more of these deals are happening. There's also an increase in overall just creative financing opportunities because more and more people are falling into distressed situations. So there's just a lot of opportunity out there. It's another reason to get in the game and stay active, focus on your education, and get your reps in terms of getting in front of motivated sellers. Because a lot of you, it's like, I could teach you the game. I can give you all the contracts. I can get you in front of the motivated sellers, but you still have to build up that confidence in your knowledge and get some at-bats. Like, you need to talk to some people. Some of you are too gun shy. If you're really gun shy or you're afraid of the phone, then you need to hire an assistant and learn how to train people to get on the phone for you and do those early calls, and then just bring the people that are pre-qualified to you. But some of us have, phone avoidance, caller avoidance. But there's a lot of opportunities out there. And the opportunities aren't just on the single family or smaller residential multifamily end. Believe it or not, like I was talking to a guy about this, one of the guys in our Boots on the Ground program where we build houses for our mentees, about this. And on the bigger deals, we were talking about like commercial deals, 40, 50 unit projects. When you're playing in that space, everybody's an investor. There are no people who own 50 unit buildings who are not investors. There are people who own single families or even duplexes, but it was just like that was the first house they bought and they stayed in it for 20 years. They're not really an investor. When you're playing with a 50 unit building, it's all investors, and investors care about cash flow, and that's kind of it. And you can structure creative financing deals with them. So in that space in particular, when you're talking about bigger deals, your opportunities for creative financing are even higher. Because when you go and talk to an investor and say, look, you want 3 million for this building, how about I give you 300K, 10%, and then we do some type of lease purchase. I'll improve the asset. We'll get you cashed out of the deal in a year, and we'll pay you a little premium on a lease so that you get some cash flow out of the deal while you're waiting for the year. And they're like, all right, cool, let's do it. I don't have to manage this thing. I don't have to deal with the headache. They can wait a year and eat some cash flow and not have a management headache, and they'll take their 300K and be on their way. And then you can go out and syndicate and raise that 300, because now you have a way to raise some money and control a deal that is not going to cost an arm and a leg. It's going to allow somebody to get into a deal creatively and create some value. So there's just a lot of opportunity out here, guys. There's just so much opportunity. We got another question. What do you say to a person in a creative sub-2 deal if they ask you what happens if you default? What you would do, and I break this down in the mentorship program, but there's something called like a performance deed. And there's ways to structure these deals in a way where if you don't perform, the deed reverts back to the original seller. They would take the property back, but the debt would be corrected. Like when you step into these sub-2s, you're getting them out of pre-foreclosure. So you would have already corrected the debt. If you miss the payment or you default somehow, they would get the property back. So they're made whole. They still have the debt, but now it's corrected. They would have like another 90 to 120 days before a foreclosure type of situation would get more dire. So they really wouldn't be any worse off than they were before you came into the situation. So you just try to correct it and make it a win-win for everybody. Your job as a creative financier is not to sit on the opposite side of the table from the person you're trying to help. Is to sit on the same side of the table and create win-win deals. When you do that, you're going to be helping people and doing the right things. More predictions. Large commercial office space buildings could be converted into multifamily residential space. So you're going to see a lot of this. There's already regulation happening behind the scene to open up more of these opportunities. The commercial real estate space is getting crushed right now. So you need regulators to come in and make it easier for these big commercial office space buildings to be converted into residential single family and multifamily spaces. Well, they won't really be single, but they'll be multifamily type of spaces, apartment buildings, condos, residential complexes. Now, there's going to be a lot of, remediation that needs to happen. A lot of asbestos remediation. Some of these commercial grade floors, they have that asbestos glue, in those tile floors and in some of the tiled walls. And there's going to be a lot that needs to be converted. But you're going to see a ton of it because America still has an affordable housing crisis. It still has this housing crisis. So as you get these assets, I mean, if we don't come in and do something to convert them to residential or make better use out of them, the banks are just going to lose all of their money. Our small banks have financed maybe 50 to 60% of this commercial office space debt. So we kind of need to reconfigure this stuff to make good use out of it, and we could use the housing. So there are going to be some opportunities there for savvy developers and investors to keep their eyes on these assets. Right now, they're on a fire sale. So if you're in a city where some of these regulations are happening, you may be able to put creatively even one of these office space buildings, even a smaller one like a low rise or a mid rise, under contract, and then kind of wait out the regulations, hang on to it, wait out the regulations, and then start trying to convert one of these things into a residential space, or sell it to a bigger developer, put it under contract and flip that contract for, a nice check. I mean, if you're doing something at that level, you could do a wholesale deal for like 50K of a profit. Number 6, I want to pound through some of these. Keep dropping your questions, comments in the chat section. We'll keep kind of flowing through those. Like, comment, subscribe. Leave a comment that says I subscribe. You guys already know why. Share the content with somebody who can get value. But bring any questions you have as we wrap up these last 2 points. Home prices will continue to increase in most metros, excluding the West Coast. So the West Coast states are most likely, they're primed to experience depreciation over the next 5 years or so. So they are likely to depreciate and go down in value. Most of the metros that we're seeing across the country, they're going to continue to rise. They're going to continue to increase in price. So sitting on the sidelines, you're just going to get, when you do get in the game, you're going to have to buy in at higher prices. It's not that there's not going to be opportunity. You can still flip, you can still hold, you can still do all these things, but why pay more for the same product? Why wait just to pay more? Like, you kind of have to ask yourself a question at some point. What are you waiting for? And some of you actually really need to ask yourself that question. What are you waiting for? I'm waiting until my money's together, my money's right. Well, if your money ain't never right, what are you waiting for? Just learn how to invest without a bunch of cash. You'd be better off. So you have to ask yourself, like, what am I waiting on? If you're waiting on prices to fall, you're going to be waiting for a while because they're not going to. So then you're going to lose that bet. And while you're waiting, somebody else is getting in the game, learning, building the relationships, and they're just going to keep winning. And your punishment is to watch other people win. That's like the worst punishment, is to have to sit there and watch other people win. And that's the number one thing you can do to your haters, is make them watch you win. That's their punishment. Number 7, interest rates are projected to fall as we get into 2024. And this will push prices even higher. That's the number one way you can guarantee prices are going higher, because as rates fall, prices increase. People can afford more house for the same monthly payment. So as rates continue to fall, which we know they're going to go down in 2024, 2025, prices are going to go higher, guys. And it's going to eat into your pocket if you're not in the game. If you're already in the game, when the prices go higher, it's going to add more value to your existing portfolio. And then you're going to be able to unlock that value in one way or another as rates tick down. So the real winners are going to be the people who are in the game, because they're going to have properties that are going to appreciate in value as rates go down. And when that happens, it's going to allow you to refinance and unlock equity at the same time. And when you unlock that equity, you can now go out and get more deals, more properties, more projects, more cash flow, more financial freedom. For those who are on the sidelines, they're just going to have missed all of that. So it kind of sucks. But that's what happens. If you don't play the game, or you're too afraid of it and you don't bet on yourself, you're going to suffer the consequence of that. If you do bet on yourself and take the steps, you'll be like Pete, and you'll be in your first deal, within 60 days or less, and winning and grinning, as they say. Randall said, what about land deals, acreage? Do you think the prices will continue to stay high? Or will the high interest rates cause land prices to fall to good deal opportunities? Land deals are different, because it's all about builder confidence. When you're investing in land deals, you need confident builders. And right now, builder confidence is not necessarily at its peaks. It's not super high, because people are building these massive buildings, throughout the Midwest and some of these locations. And market trends are changing because they built a lot of these projects based upon where people were moving during the pandemic. And now that that's not really there anymore, people are moving back to these big cities. And some of those properties are sitting like vacant. So there has to be a large degree of builder confidence wherever you're investing in land, and some of these bigger deals. Land deals take a long time to develop. You can make money in them. I was talking to somebody a couple days ago about land deals, and it's like they're like, "Oh, well, I could just flip this land and make money." Yes, you can, but it takes long. For instance, a land developer is going to want like a 6 month, like 180 day, to maybe 9 month due diligence period, just to check the entitlements, make sure they can build what they want to build, talk to the zoning board, go through some processes. Um, it's a long-term game. So you flipping one land deal, you could do it, but maybe it takes you a year or two. And do you have the fortitude to do that while somebody like me in a year or two could do over 100 deals? And are you going to watch me and others do those 100 deals? Like I said, I'm building through 20 right now. So, and they won't take, forever to do. So are you going to watch other people win at that level? Like the land is a slower deal. You can do it though. I'm not saying you can't do it, but it's a slower turn. Understand it takes a land developer who's going to go in and buy that land and build a 30 unit building. It's going to take them 18 months, soup to nuts, to get land entitlements, plans, geotech reports, sit through zoning boards and deal with the drama, get approval, get pushback from the residents, start breaking the ground, deal with the weather, deal with the supply chain issues, get it all done. Have to deal with the city inspections and the slow rolls and the drama and the pushback and the union protesting them and all the stuff that they're going to have to deal with to execute on that deal. It's going to take them 18 months to turn it before they get it tenanted and stabilized. And not everybody's like looking for that. You have to have a lot of confidence in where the market's going to build into that, because there are developers, large companies who start projects, they have to pause them. They'll just drop them for like a year because they're looking at where the market is and where rates are, and they're just not confident. You're thinking of timber on farming land. I mean, that's a whole different play. So that depends. Everything does depend on what you're doing, but I say that's even a whole nother game. So if you know some people who are interested in timber and farmland, maybe you can move that deal a little bit faster, but it depends. You're now in a super niche market. So how many people are looking for that? How many deals can you find that make sense? What types of pitfalls will you run into? I mean, there's easier ways to make a dollar in real estate than going super niched out like that. But to each their own. You can definitely do it. I would say for the average bear, it's a lot easier to go in, buy a property that needs minor renovations, renovated in like 6 to 8 weeks, and start turning a profit right away. Get your money back and go do it again. So you have to look at the velocity of money. How quickly can you flip the tables? If I'm a chef and you're a chef, I have a restaurant on this side of the street, you have a restaurant across the street, and we both are owners and we're chefs, and we have the same amount of tables. We have the same amount of space, but I can flip my tables every hour because my food, I have a limited menu, but everything's the best. And I just flip those tables hour and a half. They're in, they got drinks, they got 3 courses, they're out. So I'm flipping those tables 5 times a night. From 6 to 10, I got 5 different people serve dinner and the checks are rolling in, and you're moving slower. You like to take your time, make everything from scratch. You got this big menu. You're running a big operation, but you're not turning tables. You can only turn them twice. So I'm making way more money than you because I'm turning the money faster. So you just look at the velocity of money. This is the argument of some people who are like, I only want to do commercial deals. Why do you do residential? But then I had commercial guys come to me and say, Brian, I'm done with this commercial stuff. This stuff takes so long. How can I do more of what you do and get in and out of these deals faster? So it just depends on who you are. There's 101 ways to make money in real estate. It just matters what fits you, what fits your strategy. So you just have to find what fits you, what fits what you want to do and what your goals are. Everybody's different. But most people I found would rather make the hit the quick singles, get the quick nickels, and keep stacking up wins. Also, lenders don't care. You could do a small deal and win or a big deal and win. They look at a win as a win and a loss as a loss. You have a higher chance of losing on a great big deal than you do on a little deal. Pete said, being able to connect with Brian through the deal process helps ameliorate the fear. That was a big word, Pete. The available experience he has accessible is invaluable. Definitely. I mean, we have a lot of game, a lot of knowledge in the 100 Keys Masterclass, in the course content, being able to connect one-on-one, getting tapped into the right resources, all of these things. It's all available for you guys. It's just a matter of when you feel confident enough in yourself to jump and allow that net to appear and to take that first step into your own success. Like I said, I don't teach this stuff for me. I teach it, for you guys, so that you guys can go out and win, and so that we can rebuild these communities together. These communities need more developers, more knowledge. So, I'm a part of that, of educating the next wave of developers. And then we'll see what we can build out here. We'll see how many properties we can touch, how much affordable housing we can create, how many beautiful properties we can flip to young families and families who need that quality housing. How many contractors we can create jobs for and help people to put food on their table through construction. That's what this is all about. It's about feeding the ecosystem and being a part of the ecosystem, being a part of the solution. You'll get paid handsomely to do it. So if that's your goal, that will happen too. But as you're doing this, you're going to make a lot of money for a lot of other people too. You will become part of that ecosystem. And that's what you want. Because when you're part of an ecosystem and you're helping other people to eat, that's how you stay alive. That's how you survive droughts and different things, because you're a part of the game. When you're just a cog in the wheel, like you are at the 9 to 5, things get tough. They just axe you. They're just like, get them out of here. We don't need them. But when you're in this game and you're helping other people, you're always needed. You always have a place within that ecosystem. So, guys, hope this helped. Dropped a lot of knowledge on you. Share this content if you got value. Just share it with a friend. Share it with somebody who you think can get value from the game. Stay tapped in. If you're interested in the Boots on the Ground program where we build houses for our people, we just had a guy tap in to the Boots on the Ground from like out of the country, guys, like I believe like New Zealand. So there's just like people tapping in from all over the place, like outside of the country. We've gone, the 24/7 Cash Flow University has gone international, guys. Like we got multiple people from outside of the country and from multiple countries. So we're not only all over. I mean, you guys, my mentees, are all over the country, from Hawaii to Texas to Maine, Chicago, Detroit. I mean, we're all over the place. The Carolinas, Florida, Miami. Like we're just all over the place, guys. But we have people from outside of the country tapping in. So if you want to learn more about the Boots on the Ground, we'll build houses for you in Philly. We have the ride along. For those of you who still need that hands-on experience, tap into the ride along. That's happening. What's it, the 17th? That's happening on the 29th in 12 days. We'll be in Philly giving a ride along, getting you guys tapped in with that hands-on experience. So if you want that, reach out to me. I only do this like once, maybe twice a year. I don't do this all the time because things are getting super busy. Literally, I've been on the phone all day with people today talking about real estate, people interested in mentorship, building houses, doing all this stuff. So I can't carve out that time to really take a full day and spend it with my people, even though I love to. But if you want that, tap in. We only have one seat left for the ride along. One seat left. And once that fills up, it's done. And for the mentorship program, like D, how do you get me as a one-on-one mentor? Just tap in. However you got here, reach out. You can DM me, text me. Just go to any social media chain. I'm sure you got the email. You probably got the text to join the call. Just text me back, email me, DM me on Instagram, on TikTok, on LinkedIn. If you're in the Facebook group, hit me up in the Facebook group, DM me on Facebook, whatever. Get a hold of me. We'll talk one-on-one about the mentorship program, how you can get started. And, we'll try to get you dialed in. I mean, everybody, I want to have those same results like Pete and everybody else is getting, where you're getting your first deal, you're getting tapped in. And I got some more testimonials coming for you guys too. about people who are having success and getting deals like very quickly. Because sometimes people just want to hear it from the other mentees out there, and I appreciate that. So more of that coming for you guys too. Hopefully this helped. Yeah, the link is also in the description. Dr. Glock reminded me. Links in the description, so you can tap into the trainings, the Facebook group, everything's in the description. I'm easy to get a hold of, guys. So if you're interested, just tap one of those links, DM me, get a hold of me, and we'll go from there. Brian Grimes, your real estate mentor, signing off. Appreciate you guys.